Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Well, it is Tuesday, right? Today's Tuesday. I'm losing track of the days now. But you know what? Yesterday was super, super tight. And when you get a day as tight as that, you're really likely to get another super tight day unless there's really something going on. Now, we'll note that I am seeing a little bit of activity here at the beginning. Let's see here. We did get like housing starts and building permits here. So housing starts less than expected at 1.36 versus an expected 1.39. So housing starts change month over month negative 9.8%, and building permits change negative 1.1% versus an expected negative 1.5%. So that was good. A little bit mixed. That might be why they're moving here. Today we have, let's see here. I think that we have a Fed speaker today, don't we? Jefferson. Yeah, Jefferson speaks, but not until like way late. And we have a 20-year bond auction today. That's pretty important because the 20-year has kind of been the one that's been like there's been more interest in. And we have the FOMC meeting minutes. So I think that it's probably going to be a little bit better than yesterday. Oh, you're right. It's Wednesday. Where was I getting? You're right, it's Wednesday. So what did I do on Monday? I'm sitting here thinking, what was Monday? Oh, because Monday was a holiday, that's why. Gotcha. I can't remember what we programmed on Monday. It was the strategy. Oh, it was the spread strategy, right? Yes. This is Wednesday. Right, it's Wednesday, Thursday. Are we getting, I haven't heard much about the weather. And it's been, like, not that interesting. Now, let's come and check it out. Okay. I'm trying to decide if I should ski today or tomorrow. Chance of precipitation is 80%, 1 to 3 inches. We're supposed to get 2 inches today. Yeah, so maybe I'll just do both. Who knows? Dude, okay, so the issue I'm having here right now still does this. Why does it do this? So you come here to the chart, you see ZN, and it is not loading the historical data. What's with that? And then I come in here and I say reload all historical data. And wait forever. Still loading. See, it still says loading tick replay right there. So many charts. I mean, not really. Have one for the treasuries. Have two for ES. I don't know. Honestly, I'm not really sure why I have so many ES charts. I don't need two. But whatever. Oil. These are all just like tiny ones, right? Gold, copper, Japanese yen, Bitcoin. Just things that, I think, okay, so like I reload it and now it's fine. There has been a decent flow overnight selling. So that's curious. So keep an eye on that. One thing that I was reading about in my news squawk is that Zelensky was making comments about the whole Ukraine thing. Because my understanding is, and this doesn't really make sense to me, but it sounds like that what's happening is Donald Trump and Putin are having negotiations without Zelensky? Is that what's going on? I can't. How do you negotiate a peace deal in Ukraine without having the Ukrainians involved in the negotiations? I don't get it. But that's what they're talking about. And Zelensky's not happy about it. Obviously, not happy about it. But I think the thing that he said in particular was Donald Trump was like, we want like $500 billion of resources over the long term. And Zelensky is like, that's ridiculous. And okay. So like, I don't know. I'm having a hard time wrapping my head around the latest developments in Ukraine. I mean, granted, the whole thing's kind of been zany and like, what's going on over there? But yeah, asking that for is kind of a crazy ask. It's kind of a crazy ask. But like, you're not in a very good situation. Like, what are they gonna do? What is Ukraine gonna do? Like, they did everything they could to try and win this war. The truth of it is, this is, whenever I think about this is the thing that like my mind always comes back to, that I'm just like, this whole thing is so crazy. They weren't supposed to last this long. The West did not expect Ukraine to hold on in the way that they did. The West thought that if Russia came in, that they would do a lot of damage to the Russian army for sure, but then Russia would eventually take over the country, and then they could have like an insurgency in Ukraine for the next 20-30 years and keep Russia embroiled in Ukraine, just like they were embroiled in Afghanistan for a long time and all these, I really think that was what the West wanted, right? And it didn't happen. And instead you getting this war of attrition. And, well, I think both countries have really, really hurt themselves. Okay, so I am hearing something over the news squawk about Putin saying that the negotiations are resuming or something like that. I think Russia has good cards to play. I mean, I don't know. Surely Russia has the advantage with the situation in Ukraine. Like, I think that at this point, if it continued through, well, I don't know. Like here's the thing. Russia's hurting. I mean, they really did a number to their economy. It seemed like that they were doing well, like that they were handling it pretty well. I mean, Russia is a big country. They have a lot of resources. They are like pretty self-sufficient, but like the damage that this is doing is starting to become clear in the Russian economy. Okay, but they're obviously not hurting as much as Ukraine is. I mean, like I'm not even really sure you have a real country there. Like, is there enough men left over in Ukraine to have a real future in Ukraine? Like, it's just crazy. It's just crazy, right? So like, of course, Russia has the advantage, but I don't think that they could take over Ukraine. I still don't think that Russia could take over Ukraine. I think that if they tried to make a play on Kiev, first of all, like if they went all in, maybe they could probably do it. I think if Russia went all in on Kiev, they could do it. But it would do so much damage to Russia. They're not going to do that, right? But then if they did decide to take that kind of path, I kind of wonder if European states would get involved. You know what I mean? So, like, clearly, it seems pretty clear to me, based on the situation and all of that, that everybody kind of wants to end this thing. It seems like they want to end it, is my conclusion. And that they have no choice. So, the question then becomes, how do you end this in a way that is, you know, conducive to peace in the future, right? Because there's been so many historical circumstances where you have a peace treaty is set up in a way that, like, it just creates the next set of problems, right? So, like, if the deal that you make is Russia gets to keep all of the land that they took and Ukraine can't become a member of NATO, which it kind of sounds like maybe that's the way that they admit. I don't know. The administration hasn't said a whole lot, so I really don't know what they want. Other than that, the administration wants resources, so we get into that in a second. But if you do that, then I really don't think that provides a whole lot of incentive for Russia or anybody else that thinks that they should take over somebody else's land to, like, not do it in the future. You know what I mean? So, like, that kind of sounds like a non-starter to me. But then, like, what are you gonna do? What is Russia gonna give up to Ukraine and Donald Trump to make them feel that it was a fair deal? Well, okay, so you can give Donald Trump resources. Okay, so this is something that I'm seeing going on that I don't see people talking about, and I think is really, really important. So can I switch over to a slightly different subject for a moment? Artificial General Intelligence. Okay. AGI. Is it going to come or not? I don't know. I'm really skeptical about the like how useful artificial intelligence really is. The big thing that I keep seeing is everybody saying, "Oh, it's going to take all of the tech jobs." Like, well, why is it? I think it's funny. I think it's funny because the thing that LLMs seem to be the worst at so far is writing code. Like, anything to do with logic is where it gets bad. Granted, there's a lot of code out there that doesn't have to be very good. So LLMs can speed up development a little bit. But so far it hasn't really changed things in my world that much. Like, I will go and ask ChatGPT a question instead of looking it up on Stack Overflow. So, like, Stack Overflow seems to be the biggest loser here right now. But beyond that, like, some of these guys in Discord, they were all like, "Oh, well, you want to make your own platform? Why don't you just ask ChatGPT to do it?" No, you can't. You can't do that. I'm sorry. It would be a shit platform. It would be a shit platform. It's just not that good at it. But developers are like the kind of like the pain point in the economy right now. Like that is the thing that is like the big cost. That's what's preventing Google and pretty much every other company out there from making more money, is the amount of money that they have to pay software developers, because that's like the one place in the economy where like the worker has the advantage, I guess you could say, or at least worker had the advantage. They don't have enough of them. Then all of a sudden, AGI comes along, higher interest rates comes along, they lay everybody out, and they create this, like, what seems to me to be artificial scarcity. Like, the conditions in the tech market that I see right now kind of suggest something that won't last for very long. And if the AI efficiencies don't come, then what will happen is when the economy stabilizes, and I don't, and I'm kind of saying here, like, okay, maybe the Federal Reserve has to cut interest rates a few more times. But once we get things to, like, it's a neutral interest rate and everything is where we want it to be, right? Then I think that tech companies will be, like, behind the curve and, like, desperately trying to hire talent and regret what they're doing right now, I think, if the AI improvements don't come. Okay, so I just want to put that out there. Like, this is my general feelings about artificial intelligence before I get into this. Okay, and that is, okay, but what if AI does completely take over? That is, we get to a point where you have a general intelligence, something that actually does handle the logic and all these things, and that would take, like, several big innovations to get there. But if we did get there, then what is the world like? And the accelerationists, these people that believe, or the singularity, like, if you want to read the people that really believe this stuff, go to r/singularity on Reddit. Okay, these guys, they all think that the singularity is coming, this point where artificial intelligence in computers surpasses humans, and the rate of growth just becomes exponential, so fast that people can't keep up. People will all become cyborgs. And at that point, like, why do you even need workers? You don't even need workers at that point, because robots will just do everything. That's the idea behind the singularity. And what will that world actually be like? The people that believe in the singularity, it seems to me that a large motivating factor behind why they believe what they do is because they generally believe in the principles of socialism. They want basic universal income. That's really what that's about. They want basic universal income. And that's why they're kind of making this argument, like, you won't need workers, so how are people going to live? You're going to have to give them basic income. I really don't see how that works. I saw this other thing. Hey, instead of the Federal Reserve allowing banks to print money when we want to increase the money supply, why don't we just give it to the end people? That shouldn't result in inflation because we're printing the same amount of money, right? Wrong. Because there's a bunch of different factors involved in inflation, right? For instance, velocity of money, right? The more that the money is moving around in the economy, that tends to increase inflation, and where it's being spent. So the reason that we give it to the banks is because the banks are really good at saying, okay, well, we'll give you money, but you have to use that money to build a business or whatever and pay us back. And that's the mechanism that ensures that that capital is spent towards growth, things that actually grow the economy, instead of just spending it, which is what would happen if you gave it to the end people. That's why if you gave it to the end people, probably you get inflation. So if we give everybody a basic universal income, it probably doesn't change people's situation, at the very least, okay? So what would the world actually be like? Well, one thing that I definitely think would be a problem is that if you have general intelligence, okay, because right now they're thinking about, oh, it's just, tech workers. Okay, well, but that's because you don't have the robots yet that walk around, but they're coming in the next 5 to 10 years. Really looks to me like Amazon warehouse will just be completely robots, and there will be a lot of things, especially manufacturing. Putin's still speaking, by the way, but not saying anything too important yet. Eventually you're gonna get these there's robots that can do everything. Can you imagine, like, a house built completely by robots? That'd be crazy, but it could happen, right? When you get to that point, how do people make money? How do people make money? I don't know. Well, so first of all, it's kind of like infinite supply is what it is. It's like infinite supply. All of a sudden, labor is no longer a limitation in what we can build. We just have to, decide that we're going to build it. So that alone probably results in insane deflation. So the first thing that I think happens in this world where artificial general intelligence takes over is that the Federal Reserve will print a ton. Like, you thought it was crazy before, it'll be, like during the quantitative easing kind of era, it'll be way more crazy. They will have to have interest rates basically be rock bottom and be, buying assets like crazy and everything just to prevent the deflation. Seriously, I think it could be like a real challenge for central banks. And so I don't know if that's necessarily results in inflation, but so I got two takeaways from this. One is you want to be invested. Okay, you want to be invested in assets because quantitative easing, that was like the best era for stocks. You want to be in stocks for sure, right? And the second thing is you want to be building things. Like, if interest rates are going to be low, that's going to make it really easy for you to start your own business. You won't have to go and hire workers. You just have AGI do it, right? So building up knowledge of a particular industry so that you can be an entrepreneur in that industry using an army of robots. So that, I think, is kind of the future. I don't think that you get artificial general intelligence. Instead, what I think happens is the cost of everything becomes so cheap relative to what you make that a lot of people really just won't have to work, or at least they won't have to work regularly. People talk about, we should, because we have more efficiencies, the work week will be shorter. I kind of think that we're already to the point where the work week could be shorter, and it doesn't really work out. I think that there are some things about, like, you being there during the period of business that, having a shortened work week doesn't necessarily work. Although there are some studies about these guys that do like a 4-day work week, right? So maybe it does happen. But I'm kind of wondering if it gets to the point where, like, corporations don't really hire people. Like, everything just becomes contract work. And you make so much on one contract. You could, like, come in and do a contract for a month, doing some sort of strategic planning that business then goes and executes with their robots, right? Things that maybe, it'd have to be something that the robots can't do very well. And then you're set. And you make so much from that you live on that for possibly years. Like, that's kind of the world that I see happening, which in and of itself is maybe a little bit of a dystopia. You know what I mean? Like, because there will be no job security anymore. Everybody's an entrepreneur. Well, there's a good reason why most people aren't entrepreneurs. Most people aren't really made for it, you know? And if we basically force the whole economy into becoming entrepreneurs, like that's a little scary in and of itself. But that's kind of the place that I see things going. So anyways, takeaway number one, you probably want to be invested in assets, in stocks, because in that situation, we're likely going back to a low interest rate environment. And number two is that you need to develop your entrepreneurial skills, because in the future, I think that it'll be more and more that everybody has a side hustle of some sort. Okay. Number three, though, and this is why the whole point of this segue, okay, was materials. Like, what is the real bottleneck at that point? You have to have the materials to build the thing. You have plenty of workers to go and mine whatever the thing is, right? Like, we won't have to have slaves mining cobalt anymore. We can just have robot slaves mine the cobalt. But there's only so much cobalt, right? Like, and those rare earth minerals in particular, the ones that, you know, the things that are in low supply because there's just not a lot of them on the earth, those are going to be the things that are going to be the most valuable. So investing in materials, I think, is my best play for the artificial general intelligence future. Okay. So why am I bringing that up? Because it seems to me that the Trump administration believes that and is like going whole hog into that. You notice that like almost everything that he talks about, particularly when it comes to international relations, is basically about trying to get the United States access to more rare earth minerals. Can you imagine this future where, you know, like supply is unlimited, like the labor supply is unlimited, but we can't build any of the things that we want to build because China cuts us off from rare earth minerals and they're like the only ones producing them right now? Right? That's a big problem. That's why Donald Trump is talking about, oh, maybe we should own Greenland. Maybe we should own, or maybe Ukraine should give us, you know, some of their minerals. Things like that, right? It's because in the Trump administration's mind, the biggest strategic bottleneck for the United States in the future is materials. So I think that's why he wants, you know, $500 billion worth of you know, stuff from Ukraine. I don't know. Is that a crazy ask? It seems like a crazy ask to me, but at the same time, I'm kind of sitting here like watching the way that Zelensky is reacting to it. Because I mean, come on, he's not a general. He's a comedian. He was a comedian. So and Donald Trump is not a general either. So I think we got a bunch of guys that, you know, are not necessarily experts. Okay, it's a crazy ask. What are you gonna do about it? You know, like, I'm not saying that Donald Trump's ask is reasonable. It does kind of sound crazy to me, but I'm also really like unsure. Like, is Zelensky's reaction to it though really the best thing for him right now? I don't know. So that's what I see going on in Ukraine. But I haven't said a whole lot about Ukraine. I don't know. It's a subject I don't necessarily like to talk about because, especially on my side of the aisle, conservative side of the aisle, it's really controversial because there's a lot of isolationists on the Republican side, right? So it's like a big issue that kind of goes nowhere when you start arguing about it, right? Okay, the rare earth minerals thing is a misnomer. It is just a name. The abundance of the most used rare earth minerals is 1-30. What does that 1-30? Or are you saying 1.3 ppm versus gold is 0.005 ppm? Oh, okay. So they're much more common. Yes, and depending on which mineral, that's true. No, you are right, Julian. The biggest thing is refining of them, right? Like, well, mining and refining them, right? Because mining them is kind of like you just have to like excavate large portions of earth. Because the issue with them isn't that there's not a lot of them, it's that it's like a little particle, and so you have to take tons of material and refine it and pull those parts that you want out. Right? So, but there are, I do think that, again, when you get into that AGI future, right? Eventually you're going to get to this point where there's a certain material that becomes the one that's most in demand, and whoever holds the supply of that thing is going to be king, right? But you're right in that I don't think that I could go in and say, so what I need to do is I need to invest in cobalt mines, or I need to go and invest in lithium mines or whatever, because I don't think that I know what the material is going to be. But there is going to be a bottleneck somewhere, right? Maybe the bottleneck will just be steel. Who knows? Once you have robot laborers that actually build things, like once you get to the point where people are building houses with robots, you know, probably gonna need a lot of metal. Misha, why not stream on Twitch too? You could talk politics, etc. a lot. Not a lot of people watching content there. Are we talking trading or politics? Well, I guess right now we're talking politics, kind of. Like, where I was getting at is, I don't like to talk about the Ukraine thing, but it does look to me like that the market overnight reacted to the whole Ukraine negotiations and stuff, so we got to talk about it, right? And so part of this is just me kind of spitballing how I feel about all of these things, so that I can try and sort out where this might be relevant to markets, right? And so that's one of the big ones to me, is that it seems like that materials is a really big part of this, and I think that a lot of people are missing that. You know, they hear Donald Trump say, 500 billion, and all they hear is, well, that's super crazy, and they don't hear, why is the Trump administration so obsessed with materials, right? We're not talking, we're all just being forced to listen. Oh, I'm sorry. I can not talk about it if you don't want to hear about it. You know what? So, Misha, we used to stream to both YouTube and Twitch, and we did that via Restream. And basically what happened was nobody ever viewed on Twitch. When one or two people would come in on Twitch, they would, see that everybody was on YouTube and switch over to coming and watching on YouTube. And the few people that did come in, a lot of the time were degenerates. You know what I mean? Like, it's just a different audience. And so at the time I kind of decided, well, the audience on Twitch is not really do a whole lot. We could switch over to just streaming to YouTube. And the main motivation of doing it that way was so that we could reduce the latency on the stream. Like, using Restream added like an additional 5 seconds, so I couldn't interact with you guys as quickly and so forth. I suppose now that's not as much of an issue, because I can use a restreaming plugin. So I can stream directly to YouTube and stream directly to Twitch and have fast latency on both sides and just not use Restream. So we could do it that way. And I guess the only reason that we're not is because I'm lazy. But again, it's this thing like restreaming has become a really big thing. It used to be there's this big argument about like, do you restream or not? Does it really help you? And, you know, it doesn't really help you. But then it kind of like the market kind of shifted. I think part of it was because, well, Twitch isn't doing as well, you know? So creators kind of started to get to the point where it was like, oh, actually, it's absolutely to my benefit to like stream everywhere, right? But that's for people that like they're primarily on Twitch and they want to be able to build an audience up elsewhere in case things on Twitch don't go very well, right? We're kind of like the opposite. We have things going really well on YouTube. The streaming goes pretty okay on YouTube. Would Twitch really grow things that much? I don't think that it would, but it's not like it's a huge ask for me. One of the things is that I've gone and I've streamed to like Rumble. But then what'll happen is I'll do it for a week and then I forget what's going on in the weekend, and then Monday comes along and I forget to turn it on. So I suppose we could try it. Rumble is an awful platform. I'm not gonna say it's an awful platform, but when I get on the platform, I really don't see anything that really makes me like, oh yeah, this is the future. Like we should come and stream over here, right? It's really just like a discount version of YouTube, you know, with a bunch of content that I'm really not very interested in. You know what I think it is? So I was thinking about this yesterday, because, you know, we'll get people come in and they want to talk about technical analysis. What time frame are you trading? What period moving average do you use? Just child shit. It's come on. We're trying to do real professional trading here. When I think about it, you know what? Retail day trading is a joke. It is. Retail day trading is a joke. I mean that like everybody else that's not in this world and they look at it and you tell them that you're day trading or whatever, they're thinking you're a joke. I think for the most part. There's a lot of talk. See it on Reddit all the time, like, do you tell your friends and family that you're doing it? Like, it's because it's hard to talk to other people about it. One, they have no clue what you're talking about. And two, kind of seems that like it affects the way that people see you and that they kind of look down on you. Because retail day trading is a joke. Why is retail day trading a joke? Well, 95% of retail day traders lose money, and they lose a lot of money. So is it that? Well, maybe. It probably is a factor. But you know what? Like, so like I've been watching a lot of hockey this year because we got a hockey team. Okay. I'm not going to go, the San Jose Sharks, they suck. they're just a terrible team. Okay. But I'm not going to go and call the people playing on that team losers, because good grief, they're hockey players, man. Like just the fact that you're out there and to get into the NHL, man, the insane amounts of work and effort and everything that they have to do to go and play hockey, and those guys, they're serious, man. They take it seriously, and they take their sport seriously in a way that the other sports don't. So there's a lot of respect for people that play hockey. I ain't gonna trash somebody that's going and playing hockey, right? But what if you were going out to go and play hockey and you came out there with a tennis racket? Yeah, then we're gonna make fun of you, right? So I think that a large portion of why retail day traders are considered a joke, especially amongst the professional traders, you know, is because they're doing it in like the most unexcellent way possible. Like the way what they're doing is just laughable compared to the way that professional trading really works. And not just because they're losing money. Like honestly, it's a zero-sum game. So the majority of traders are going to lose, right? Like, just if everything was completely random about it, then I think that 50% of people or more should still lose. Okay, now you add on top of that skill, and the ones that are the most skilled, they get the most money, they get the most resources, and that allows them to increase their edge, increase their edge. Yeah, most retail traders are going to lose, but we kind of need it, right? Like, the market doesn't function if there aren't people trading. There's not noise in the market. Okay, so we need retail traders to trade, even though like the majority of them are going to lose, right? So why are they considered losers? Well, because they're not even really actually playing the game. They don't understand it, right? So when I think about some of these things, like, why do I come down on this side when it seems like that most people don't in the day trading community? Well, it's because their value is, I want to make money, right? And the problem with that is that if your value is you want to make money, then don't day trade, because you could probably do just about anything else and you would probably make more money from it for your effort. Just straight up, you would. So then why would you day trade? I think that part of it is that you want to be excellent. That's what it really is. Especially day trading futures. Day trading futures. I think the only reason you day trade futures is because you want to be involved in the markets and you want to do it in the most awesome, excellent way possible. That's what we're doing here. We're on the front lines. We're looking at the most sophisticated data, the most sophisticated forms of analysis, really understanding the market, knowing what's going on, and doing our best to do an excellent job at the thing that we're doing. And I get all of these people that come in that don't value excellence. They're in because they think that they're going to make a quick buck. Then they're in the wrong place, right? No, you want to come in here and you want to be excellent. And I'll tell you, an excellent trader knows what's going on in the world. The excellent trader knows why the market's moving that day. Excellent trader is informed. This idea that you're just going to come in and trade some pattern and make a ton of money, it's a fool's game. And so that to me is the value I think that I have. Excellence. That seems to be lacking in the rest of the world. And that I see a lot of people in the day trading community that don't value excellence. They're actually into day trading because they think that it's going to be quick, easy money, and not because they want to be excellent. And the whole thing on Twitch is that I see a lot of people on Twitch that don't, like everybody that ever came in from Twitch, that didn't seem like they valued excellence, So, we can start streaming on Twitch if you guys want, though. Because there are some, like, features about it that are cool. If you're going to talk, that shit show your peanut, well, I mean, you can see the numbers from the past week. What do you want to see, right? So this is bigger issue, like, what is a profitable trader? If I've made the money past month, am I profitable? Well, my standard should be, I think your standard should be 5 years. But like, chances of any retail trader trading for 5 years and like making money all 5 of those years, pretty low. And that doesn't mean that they're a bad trader. Like, they could still be an amazing trader, right? I think that the part of the thing that you got to go to 5 years is like, people will say, well, there's this thing in the market. This works. Well, how do you know? You don't have enough data to say that. You need 5 years of data, and if you can't backtest it, you're just doing it entirely discretionarily, then you know, you'd have to do it for 5 years to prove that it works, right? That's all we bring about that. So this comes up on the subreddit all the time, right? There's like, you know, if you're not a profitable trader, guys, then you shouldn't be talking. Well, okay, if you had to be a profitable trader by speculator Seth standards, then nobody would be able to post anything, you know? Cumulative delta goes from, say, 54,000 to 45,000. What's your interpretation? If that were to happen in the 10-year treasury, then I would say that that is about the average sized swing down. Probably somebody coming in and selling, but not a big deal. How long have you been profitable? So again, by that standard, a year. Like the last big I want to say blow up. I don't blow up, but I will have periods of bad performance. And I had a period of bad performance around this time. It was really like the second half of January, first half of February of last year that I didn't trade very well. I didn't blow up. I just, you know, it was a drawdown. And then, you know, it's gone back to going okay since then. And in fact, I think that we I don't think we completely dug out of that hole, but I think for the most part we did. If I had been able to, so that's the other thing, is that I lost the day job, so I'm really being careful with the money. So I'm not live trading right now at all. I haven't. Well, I'll take like one live trade a month, basically, until we get the day job again. So from that perspective, are you even trading? I don't know. But you get what I'm. But you know, just go back to the thing that the larger thing that I'm saying here, right? Okay. If your only value here is make money, I want to make a ton of money. I only want to listen to people that are making money. Don't day trade, man. So you're in the wrong industry if that's your approach, right? The reason you can come here is because we do it the most excellent way. We know the most about the market. We have the most empirically proven information. We actually understand the flows, the macroeconomics, the individual stocks, like we're informed. And most retail traders, they're not trying to do it the most excellent way. They're basically they're following superstitions as far as I'm concerned. And they're a joke. It is a joke. I think next time somebody comes and asks me like what period moving average should I use, I should just make fun of them, because it's like that's not what we're doing here, right? I think that you should listen to the things that I'm saying, because I can give you empirically proven information about the markets that nobody else is sharing for some reason. It's really relevant information to you, but for some reason they don't. Especially things about order flow, right? Because my opinion on Ukraine, that's just an opinion, right? I'm not an expert in foreign policy, unfortunately. I try my best, but, you know, I think that to really be an expert in foreign policy, I would have to have some sort of inside track that I don't have, you know? Can you expand more on that interpretation? I mean, not really, D, because it's just not a significant thing, right? Like, I don't know, like the way that you're presenting it is kind of like, this is like everything. This could be everything right now. But like, if I see that, it just doesn't interest me that much, because it's the typical move in ZN. But it doesn't matter what you know. It only matters if you can make that knowledge actionable with profitable executed trades. Well, so again, maybe day trading's not for you then. Like, because seriously, 99% chance that you're gonna lose money overall from it, right? Like the number of people that trade for 5 years and are net profitable after that 5 years, let alone like net profitable in every year of those 5 years, there might not even be 1 out of 100. Like it's super, super tight. Now, there is certainly this gap between here's what we know, can we turn what we know into profitable trading? Well, that's up to you. That's up to you. And there's probably a decent amount of luck to it, right? But wouldn't you rather be armed with the information than not? You know, like... I haven't seen one profitable trader, at least by Seth's definition. None of these guys in chat are telling you how they're performing, so how would you know? I have to say, especially those guys that have been here for a really, really long time. So like Uzi, Octavius has been around for a really long time. Those are kind of the ones that are around right now, at least. Man, I've seen them take some really impressive trades. They've definitely had some impressive periods of performance. I don't know if they've been profitable over a 5-year period. But again, kind of comes back to this thing like, yeah, Uzi says I have my ups and downs. Yeah. like again, if all that you care about is that people have made money from it, then don't day trade, right? Like every retail hasn't, well, because I have all of these people that will say, "Oh, I'm a profitable trader," and then we ask them to share their results, and they either won't share them or they're not up to par. Why would I show people if I am profitable or not? It's almost like it's really not a useful question, is it? You see, body bag? You're not. I think you're like saying, "Oh, like I caught you," but really, all I've done is I've got you to point out the contradiction yourself. Yeah, I think if you're going to tell everyone how profitable you are, you should prove it if you are profitable. But if you flex nuts, you deserve. Yeah, that's exactly it. Once you start citing yourself as an authority in an argument, that's when it's like you have to put up or shut up, right? But I never do that. I never sit down and say, "Well, I'm right and you're wrong because I'm the expert YouTube live streamer." No. My argument is always, let's look at the empirical evidence, right? I think AO did show me one of his screens. I forget sometimes what names you guys, because you shifted names relatively recently. I forget what your name was before, but I do think he showed me. But not 5 years. None of you have showed me 5 years. I don't think I've ever had somebody show me 5 years. I've certainly seen some impressive runs, though. And I would say more broadly, I would put my audience up in a trading competition against anyone else. Oh yeah, you did. You showed me Uzi's right. He showed us the 5-year performance of his portfolio. Not his day trading, but his portfolio, yes. And it was pretty good. I'm pretty happy with the 5-year performance of my portfolio, but my portfolio is not as built out as I want it to be, so I don't really consider it like serious. Oh yeah, no, I'm not. I know you're different from Tilt.
Block by.
It's okay, I can't complain. Yeah. Because really what I'm playing with here is, okay, when we get people in that don't seem to get it, why is that? Well, it must be because they have a different set of values. Well, the only value that I can possibly think of that somebody could be running off of to make those kind of arguments is that it's important that you make money from what you're doing. And that's a really problematic value to have if you're a futures day trader. Right? So my kind of approach to this now is, well, if it's really about making the most money, then you're a fool for trying to day trade. Because there's basically a 99% chance that you're not going to make money from it. And if you do make money from it, it's probably not going to be all that much relative to the amount of effort that you put in. So if it's really all about making money, you know, like, if it's really all about making money, and the way that we measure a trader is by how much money they've made, then day trading in and of itself makes you a bad trader. Like, it's really that simple. In order to be day trading, there has to be something else driving you besides the value of that you should be making money, you know? Been trying to move my day trading treasuries activity to portfolio hedging on the day more than scalping. It's a bit easier in terms of absorbing volatility. My overall contention is the edge as a trader. Form-fitting a rule-based algo to your dynamic environment is illogical, hence, well, okay. So, yes and no. Okay, so you are correct that if I try to create a scalping strategy that works on a 1 to 30 minute period, and I want it to be profitable over a 5-year period, that's probably not very realistic. Yeah. Because at that point, you're probably not picking up on something structural, right? If it's something structural to the market, then it should always be there, right? But if I'm picking up on something that has more to do with that market, like for instance, it works because there's quantitative easing, or it works because interest rates are high right now, or something like that, right? Then I shouldn't expect that to always work, only when those conditions are met, right? But in order for that to be useful to us, we have to be able to show the conditions when it works and when it doesn't work, right? Which is to say that we should be able to create a filter that says, you know, when we have these conditions, you trade this strategy, and when we have these conditions, you trade this strategy. So now you can get into things where you can create this really big, and we have done this a little bit too. You can create this big conditions switching algorithm where, based on what the current conditions are, it switches between which algorithm it uses, right? So So you're picking up on something that's true, but you should still be able to show that with a back test. You just have a higher level filter on the back test that to say these are the conditions in which it works, and then here's how it performs when you have those conditions. Now that makes it difficult because you still need a certain amount of data to prove things beyond the margin of error. And if you have to filter out large, periods of the market, then how are you going to be able to pull enough data to get that statistically significant result? But it can be done. And that's what a lot of like macro traders are kind of doing. Right? But most of the things that retail traders come to me with, the thing that I think is kind of funny about it is that you would think that it would be like with technical analysis, well, like if it works, right? Like if we can find some statistical aberration, then, who cares why it happens, right? But I don't get that very often. There's usually some sort of premise that they're coming into from the start. And the problem is that the general premises behind technical analysis in general are just false. And that's why I kind of come into these things where like for instance, this inside bar thing, right? When I heard that one, it kind of excited me because I back tested that stuff before. Not exactly in that way, but I've done a bunch of different setups with an inside bar and outside bars, right? And I kind of know the general properties behind it, and we've kind of been able to work out why that is from what we do know about the market microstructure. And so I was hearing something that was immediately like, I know that that's not true. And what do you know? Like when we went and we back tested it, you did better trading against it, right? Which is to say, it wasn't either way. It wasn't a strategy worth trading, but the results backed up what I was saying about the market, which is that, when you get that contraction, it tends to stay that way for at least 45 minutes. So, but I get this other thing. Which is like, everything works. It's just the trader has to be, like if you work on yourself and your psychology well enough, and then you can get anything to work. That's nonsense. Like you have to have an actual profitable strategy first. See, I think the reason why people say that is because you will get some people that you'll have two people that get the exact same results and they'll react to them differently. One person will just only see the results that were positive and declare themselves the greatest trader ever. And another person will see that the reality is that they didn't make money overall and are like, what am I doing wrong? And so other people will see that two people trading the same strategy, one acts one way and one acts the other way. Oh, it must be the mentality. The reason that this guy is successful is because of his mentality. But the reality is that guy isn't really actually successful. You just aren't looking at enough data. That's why I don't really care whether somebody that I'm talking to has made money from their trading or not. Because I know that whatever their results are, they're probably not going to be 5 years of profits, right? So who cares? All I care about is they're saying something about the market. Can we actually prove that thing about the market is actually a thing? Do we have empirical evidence to back up that claim? That's all I care about. I don't think that that's true. You took a basic strat and injected your own assumptions into the code that were in total conflict. So if there's something about the strategy that you think should be changed, then let's change it. I mean, it's always going to, if that's your approach, it's always going to come down to that, right? It's like, I believe this thing about the market, but I can't prove it empirically, so I have to rely on you to prove it empirically. But then no matter what you do, I'm always going to disagree with the way that you did it. The only way that you can resolve that conundrum is by doing it yourself. But if you don't have the skills to do it yourself, then you just can't do it. But then at that point, why do you believe the thing that you believe? Because you have no empirical evidence to back it up. And then it's kind of like, well, why are we wasting our time with it? Okay, what market conditions do you want to limit it to? You want to apply a filter to it? Like, be specific. What I'm hearing is, we don't like the results of the backtest, so we're going to try and introduce vagaries into it to what is the word? Not disqualify. I don't know, it wasn't your strat. Oh, okay. So, like, he wasn't specific enough about what those conditions were to back. But that's what he was doing, right? Is like, he doesn't like the backtest results, so he's going to try and fuzzy things so that he can still believe in it, even though he has absolutely no data backing up what he's saying. Right? Because I can come into his strategy and I can say, hey, you know what? This strategy works pretty good, but if the ATR is over 1.5%, you are in a period of high volatility, and at that point, the market is so wild that it just doesn't work very well. So you don't trade during those periods. You count out those periods of high volatility. And then I can show you, and you can see the results of it, right? Some specific conditions, right? I'm getting interested in what's going on over here in ZN, because although I don't really see a significant change in cumulative delta, it did kind of get to some levels that I don't think that it should be able to get to normally. So kind of on the lookout for some further signs that maybe there's going to be another leg higher. Well, we could utilize higher time frame alignment. We could say, like, only take the trade when all three time frames, or like when we're up on the day, we're up on the week, we're up on the month, for instance. But so if we do that, what that condition when all of those timeframes are in agreement with each other really cuts down on the number of trades that you take. So we certainly wouldn't be able to get enough data to get a statistically significant result, but you can still look at the results with the data that you have. But I'm still super skeptical on that one, just because I did a lot of backtesting with like time frame alignment, and it seems to me that time frame alignment does create certain statistical curiosities, but that it doesn't create an advantage. It kind of creates this situation where like it maybe works out a lot, but when it doesn't work out, it's so terrible that it doesn't make up for it. That's my point. You're already assuming how he defines it. He could totally be in conflict with what he does. Okay, so then at that point, if he can't define it for us, then why should we care? So here we have a person claims he's profitable. He can't show me 5 years of results. He can't completely explain how he's doing what he's doing. Okay, cool. I can just disregard everything that he says, because at that point he's not giving me anything that I can really go off of. Right? Like if I can't if I can't test it empirically, it's useless information. Can't or won't. I mean, as far as I'm concerned, again, it doesn't matter, because if I can't empirically test it, it's still useless to me. I mean, heck, if he can't explain how he's doing it, I can't even try and copy it discretionarily, right? Oh, no. I totally gave him a chance. I went through a little bit. I did insult him a lot. I did. Because he kept saying low IQ things. That was the thing that really bothered me about that one. Was that it wasn't just that he was saying things that I was like, I have a lot of evidence to say that it's the opposite of what you're saying. But like his take on everything kind of came into a logical fallacy that is like a warning sign to me of somebody that's low IQ. Like if I come in and I say, statistically speaking, almost all of the highly disagreeable people that are low in agreeableness, almost all of them are men, because of the way that the distribution works, right? And then if the first thing that somebody says, you're talking to somebody and you're talking about that, and the first thing that they say is, well, that's not true. I know this one woman that's highly disagreeable. That's a big red flag that they're low IQ in my book. And it's really weird to talk about those sorts of things, because like, I mean, I don't think that I'm necessarily higher IQ than other people. And I kind of like question the actual efficacy of the IQ stat in and of itself. And I think that it's like highly abused. Okay. But I'm just using that word as kind of like in a general sense. There's like a group of people out there that there are just certain concepts that they just don't have the brain capacity to understand, right? And he kept saying things that gave me that are like red flags for that. Okay, but no, you're missing. Okay, maybe it's a case of he had a winning strat and he didn't want to put it out on the internet. Okay, cool. He has a winning strat. He doesn't want to put it out on the internet. Why do I care? Yes, Uzi, why initiate the conversation to begin with? But no, I'll answer it for you. Because he and a lot of you other people have this value ingrained into you that the thing that matters the most is how much money you've made from doing the thing. And that having made money from doing the thing somehow makes you worthy of admiration, more valuable than other people, smarter than other people. Once you actually understand the market, you'll realize how stupid that is. The best way to make money from the market is to just be stupid and do stupid shit and take really, really dumb risks and be the one guy that was lucky enough to get away with it. Does that make you more valuable than other people that you were lucky? I guess. I don't know. Does it make you smarter than other people? No, it doesn't. It actually kind of makes you dumber than other people. So it's like you're the one that was dumb enough to do that thing when everybody else is like, this is not really a very smart thing. It's not very good risk. You know, you were the one that took the risk and you got away with it. And there's going to be like 100 other guys that were also just as stupid as you. And they crashed and burned. And because they crashed and burned, everybody calls them losers. But then there's the one guy that did the exact same thing and they got away with it. And now they're supposed to be smart? No. Once you understand that the market is not informationally efficient. Current prices do not reflect all available information. Success in the market does not equate to that you're more valuable to society. This is the lie. It's a lie that we've been fed. It's not true. It's not true. The market is an inanimate thing that has a lot of flaws to it. And success in the market does, like that outsized success, especially in day trading, does not necessarily speak well of you. So why should I care if somebody comes into my chat and tells me that they're profitable? If they cannot give me empirical information that enhances my understanding of the market, they can back up what they're saying with data, it's useless to me. And they're going to come in and tell me that because they think that's going to give them some sort of social admiration. But I don't care because I understand how stupid of a value that is. What do I care about? I want to understand the market as well as possible. Doesn't matter if I can make money from it or not. I want to understand what it is. I have to know things about it that I can prove with data. And I want to do it the most excellent way possible. If I'm going to do something, I'm going to do the absolute best. I'm going to do it in a way that quality... excellence means of notable quality. That means it's not just good. It's not necessarily just the best. It doesn't have to be the best, but there is a quality about it that is unique. That's what I'm going to do. That's why I do it. That's why I do it the way that I do it. Because if it was about making the most money, I would probably not day trade. Those are the two things, right? Understand the world and excellence. Do you see now? So if somebody comes in and they're like, well, I've been profitable. Okay, cool. Guess what? That's useless to me. Yeah, well, I don't feel any YouTuber is worthy of me needing to prove my results to them. But actually it is, Spotty Bag, because if you want people to give you adoration for having made money from the markets, then of course they're going to ask you to put up. And if you're not willing to put up, then you shouldn't expect them to, like if they held that value, that you having made money, it makes you, deserving of some accolades, right? Then you're going to have to prove it to them that they did. Because if you didn't care about that, if you didn't hold that value, you would never say anything in the first place. And if it came down to, well, we're talking about a specific market condition, and, well, I've made money, and this is what I think of it, and so that should be evidence for that thing, well, that's completely useless for trying to prove that behavior about the markets. We really actually want to prove something about the markets, we have to do it empirically. You see the conundrum? It comes down to values. If you have this one value, then you're in the wrong space, right? Listen, if you want people to give you accolades for, like, you've made money from this thing, you've done really good at, go into sales, right? Yeah. When somebody backs you into a corner demanding evidence of your godhood, you get defensive and have every excuse in the book for not showing shit. Yeah. It's, again, like, if you're not willing to put up, why even mention it in the first place? I think it kind of comes down to a denial about what is actually driving your behavior. So like, come back out to it, right? 99% of retail day traders lose money. So why are you doing it? You can't explain that. There's another obvious reason maybe I'm trolling. Okay, but if you're coming in and you're trolling, why are you trolling, right? You're in denial about what drives your own behavior, right? Even when people are trolling. Okay, what is it that you're going to come into a stream, tell people that you're profitable, not do it? Why does that get you going? Right? And I think, maybe Tilts is trolling. Maybe Tilts is trolling. But if Tilts is trolling, I'm still saying that comes down to some fundamental set of values that don't make sense. Well, we can go to Salim. Salim is a good example, right? Because he totally wants the attention, right? He got it. It was fun. We haven't heard much from him in the past year now that he's in school, huh? Hope he's doing well. I'm sure he probably is. Because he was getting serious. Is that a thing, like, so when I was a kid, I want to say this was when I was like maybe 8 years old. Let me back up. Grandma had a kid when she was like 50 or something like that. Like I don't think it was supposed to happen. I don't know how that, but she had one child long after all the other children. Okay, he was like my dad was already 20 and he had kids when he was born. Okay, and then Grandpa died. So this last kid, the uncle, they had it rough. He didn't always get along with Grandma, and it's not all his fault either. Okay. So for a long time, he lived with us. So when I was a kid, my uncle lived with us, and like when he was in high school, essentially. And the one thing that I remember the most is his alarm would go off, and this was before phones and stuff like that, right? The alarm would go off, and he would just hit snooze over and over and over and over and over again, and like sleep all day. And eventually, I think that he worked things out. Like, he got his GED. He got a good job doing tech that he's been doing for a long time, and he's basically like the CTO of that company, like a very, very valuable person in that company that keeps the whole operation running. Like he to get out of school and work and start working, and he worked hard, and he got his shit together, essentially. And I kind of wonder, like, is it just a thing in guys that, like, at some point a switch turns on and you get like that? Because I certainly have seen many people do that, where they didn't take anything seriously going up through high school, and then somewhere along the line in the 20s they actually got serious. Kind of wonder if that's what happened to Salim, was because like he was like struggling a little bit in school, and then like you were like, work hard and do well at school, because that's what's going to get you to what you actually want to do. And then he did that. He got serious, and we haven't heard from him. And I kind of wonder about that, because my stepson, there's been a couple of times where he slept through school. And I'm like, what am I supposed to do about this? I don't know how to deal with this. There's another tick up. I mean, I should have said something long before 24.5, but it does look like there's a real flow coming through now. In fact, it's kind of getting to a bit of an excess now. That's only a 10K change in cumulative delta? But it's across the board. What do you think? My theory is that it's demand for the 20-year auction. There's been good demand for the 20-year auction. Good observation, Octavius. 5K offer at 11 in ZF. Okay, let me try approaching this from a different direction. I like to argue. I will really, really get myself involved in like multiple levels deep argument on Reddit with people about nonsense stuff. Okay. Why do I enjoy doing that? Well, so we can kind of take it back from this. For me, it's entertainment. It is entertainment. But why does that entertain me? Well, you know, I'm ADHD, and that antagonism can kind of generate norepinephrine and dopamine and kind of create that cycle. This is why on social media, you get more engagement on negative posts, right? But there's also a lot of negativity involved around that. It's not necessarily a good thing for you, right? So why is it that would give you enough to keep you going? I think that at the heart of it, there still has to be a value there. Because if the thing that you were doing was like completely in conflict with your values, I don't think that you would get the same rise out of it, right? So what is it for me? Well, because to me, understanding the world is important. That's a value there. The being informed is a value, essentially, a key value. So I'm willing to argue about things because I think I'm right. And I think that it's important that I'm right. And I think that it's important to try and, show other people what the correct thing is. That's why, right? You see? Now once we get back to the values, right? At the very heart, even if you're trolling people, I think that it's saying something about your underlying values. And a lot of the time people are in denial about what the values are that are actually driving them. Madi, do you use Bookmap as well? Nope. Everything that I do is on the DOM. There's not a single thing that I could see in a Bookmap heat map that I can't see on the DOM. They have a DOM, but it's not as good. It's not quite as good. By the way, I missed this comment earlier. Octavia says, do you know anything about the K algos? I'm not sure what you're talking about there. Okay, there's something else going on here. So 10K orders up. Relatively large trend. There's a lot of things about this move that I don't think completely make sense. So here's the 10K change. Okay. But it was a 10K change up and then a 5K change down. And it's still just sitting there. So I don't think that it's really the flow. I mean, like, the flow is coming in long. There's got to be something else driving it. The Japanese yen is moving pretty strongly here. I don't think that any of the others are. There was Bank of Japan comments today. So maybe it is just a currency driven move. And the flows kind of just happen to be, hence why it's able to move so much on a relatively mild flow. Nah. In my opinion, heat map may be better for understanding, but there's nothing you can see on the heat map that you can't see on the DOM, and that you can't see better on the DOM, frankly. If you get into like programming HFT algorithms that analyze level 2 to place trades, okay, there's nothing in the heat map that you're gonna see that I would have to generate a data structure that shows the heat map and analyze that heat map. It's not a thing. Can you imagine that? It would have to be like this dictionary that's like the level 2 at each point over a period and then going back. It's a lot of data. But how are you going to analyze that thing for some pattern in it? It's just, I'm a little battle going on in ZB. Well, they all kind of took a pause. You can see the long-term liquidities that to know when that amount of bid or yeah, but I can see that here right now. Well, it's all order flow. Yeah, but all I'm saying is that the Vista charts are just showing you the same data that you're seeing on the DOM, but in a way that's not as useful. Like the things that the Vista chart lets you see really well aren't very helpful. And the things that the Vista chart can't see are some of the most important behaviors to help you understand the order flow. Your mother doesn't think so. But Body Bag has not shown the low IQ things. But Body Bag seems to me that he has been is kind of more in the, what would we say, the traditional day trader space. He's been mistaught. No, it probably will never get through. I'll never be able to convince him. So like what you get here with the Vista chart, like what can you see on the Vista chart really well? You can see where there is a particularly large bid or offer, and you can see that it's been there for a really long time, right? So first thing is that if there is a particularly large bid or offer, it's probably been there for a long time. Like that's probably been there either since the last time it was at that price, or like from the beginning of the session. Like it's just it's always gonna be there, okay? Except for in some situations where like a really big bid or offer shows up on the inside, and then when does that matter? When it shows up, right? So there's really nothing about being able to analyze the past history of it that really helps you. Whereas if we're able to look at the inside on the DOM, what you're going to see is market orders eating away, slowly but steadily eating away at that offer. You can kind of see it once I put this flip chart up and stuff. But again, like you can just see it better over here. That acts as a magnet run. I know where you're getting that from. I know why people say that. But Just trust me. We went down that rabbit hole for a really, really long time. Don't base your trading on that. The market is streaky with it. It will go through periods where they always seem to want to go towards the liquidity. And then you have periods where they always want to go away from the liquidity. And it's not a reliable signal. It's a belief that people have. There seems to be nothing structural behind it. And there's nothing there's this idea that like because there's a large order up here, we're more likely to move in that direction. It's not true. That was one that we tested by hand before we kind of had the ability to do these things with. Could we test that empirically? I suppose we probably could. Part of the issue with that one is what point do you say there's a setup, right? I think that what we would have to do is we'd have to say, pick a random time period, and then when we are to that random time period, look to see if there is a large order above or below us, and or close to us, and then take a trade on it going in that direction and hold it for until the end of the session, I guess, until it reaches that point or the end of the session, and see what the statistics are on it. But that's you know what, I should approach this from a different way. The reason I don't like the Vista chart is because everybody focuses on that, right? So we want to teach people about market depth and order flow, and there's all of these interesting behaviors. The most interesting and most useful behavior, in my opinion, is the way that the latent liquidity acts to new orders. That's what I think you really want to be looking at. So you're kind of looking at the changes in the changes. When you pull the Vista chart up, everybody focuses on, oh, there's a big order below us at 24. The most useless piece of information that you get from the market depth. That's like right? And that's why I hate the Vista chart. Because it focuses your attention on the wrong thing. Because you get all of these people that think that they're trading order flow, and they think that they understand order flow, and they really don't know a thing, because all they've ever done is just try and look for big orders and see if price will bounce or move towards those big orders. That's why I'm not a fan of it. And the problem with Big Book Map is that, like, it's a great platform and everything, but like that's the main selling point of the platform. Oh, you know, I never enabled this. It's probably too late too. We can still enable it. I don't know, would it have gone off? Well, first we can see if now that we load it this time that it loads correctly. Yes, we would have been triggered. We'd be getting triggered short right now, in fact. This has turned into more eventful of a session than I thought it would be. I don't know though, like 23 to 27. It's not that crazy of a move. My entry most of the time is after a big volume comes to market. Oh. Okay. Now you got me thinking, like, you know what I really should do is I should just sit here and make a bunch of great jokes and, you know, just say, way to go, guys, for everything that people tell me. Oh, that's cool. Yeah, way to go. I took a small account and methodically grow it. Good job. You're doing good, kids. Do you smell what I'm stepping in yet? Show me excellence. Show me. That joke a day keeps the meanies away. I want to see excellence. You gotta show me something that shows that excellence. It's like you want to go and talk about like what moving average is best, and that like go to r/day trading with the other kids. I don't want to come here and engage in the popular culture of the day trading community, because I don't think that the popular culture of the day trading community is excellent. I think it's trash. I think it's juvenile, uninformed, simplistic. And here we're trying to do like one of the most sophisticated things you can do. How do you do that? Excellently. It's not simple, it's stupid. Maybe despite all our efforts to do it the most excellent way, utilizing the best empirical data that we have available to us in the form of order flow, being the most informed traders that we possibly can be, trading one of the most sophisticated instruments we can in the treasuries. But maybe at the end of the day, we're still just stupid. That may just be the case, yeah. As simple as it is a power. No, it's not. Well, it is and it isn't. So there's a real conundrum between there's an apparent okay. There is an apparent contradiction between simplicity and complexity, but in reality there's not. See, the market is incredibly statistically efficient, especially on short time frames. You trade something, your orders, they have an impact on a market. If there's some pattern, everybody sees the pattern, they're going to trade the pattern, and that makes the pattern disappear. So in order to find a real statistical edge in the market, it tends to require a lot of resources and a great degree of sophistication. You have to be doing something that not everybody can see. So it requires complexity, right? But there's an issue with that, because the more complex things become, that's all of that information that you as a human being aren't necessarily equipped to deal with. You can kind of get this information overload that causes you to freeze and makes it difficult for you to make decisions. So how do you deal with that? How do you deal with this conundrum that you need things that are sophisticated, but being sophisticated makes it more difficult to execute? Well, you have to do all of your analysis ahead of time, and you have to have a really set, clear system that allows you to analyze what's going on. So the way that we do that is we look at flows. We, at the beginning of the day, kind of look at what are the flows that could be going on in the market. I think one flow that's probably driving us right now is the Japanese yen, comments from their central bank, and also 20-year auction. Those are the two major flows I'm looking at right now. It does kind of seem like it's to the upside. I don't know enough about those flows to know if there's going to be a second leg. But I can do all of that analysis ahead of time so that then when it's time to execute, it can be a simple thing. So I've already done all of the work. So then it's not a problem. It's not a contradiction, because you can go and you can do all of your very sophisticated analysis, but because it's a set system that you've been practicing and doing every day, you will basically do all of that complexity without even thinking about it. The details you're looking at is just the result and not necessarily the pattern. Well, the pattern does keep changing. Yeah, the idea of, I think more generally, the idea that you're going to see some pattern in the data, and that pattern in and of itself will result in some sort of profitable setup. I just don't believe in that idea anymore. I just straight up, I don't think that it works that way. I think that the patterns that you see in the market are the results of big players doing certain things. There are patterns that you're going to see regularly, especially this whole kind of, move, pull back, move, bear trap sort of a thing. There's a reason that happens, but it's not a setup. It's kind of like, okay, the thing that I wanted to happen happened, and when I see that pattern, that means that I'm done. It's the opposite. So I was kind of being a little bit dismissive when somebody earlier was talking about, like when I get a big move of volume in. Because to me, that is okay, like we were right about something, now we can take it off because that volume came out, right? I want to take it when nothing's happening. I want to take it when everybody's bored with it. I want to take it when there's nothing unique or interesting about the data in that situation that would cause people to want to get in it. I know based on the flows for that day, like if we were going to come in on this one, let's just say for the sake of argument that we got to this point where we did think that there was going to be a strong flow long today, then what would have been the best way to play it? Well, I probably would want to get in below this line for starters. So somewhere up in here, right? And you kind of get this thing where it's like it's gone down and it's going like up, and then what does it do? It just goes sideways. That's probably the best spot right there. There's nothing interesting about it. There's nothing interesting about it. We get an uptick. It still goes sideways. There's still nothing interesting about it. So you get a second entry there. Then you get this. Then it got interesting. Then I started catching on to it, right? Me that didn't actually think that there was necessarily a strong imbalance coming through today. Then at that point it was, oh, maybe there is a strong imbalance. Although we still hadn't gotten the volume yet, interestingly enough. Right there. Still hadn't gotten the volume yet. Then we get the volume. Now it's interesting. So now there's going to be all of these people that are like, oh, something's going on. There's a big trend. Maybe I should get in here. This trend is going to continue. And that's when I get out. You see? Okay, volume spread analysis. Somebody gave me a book about volume spread analysis, and I think that the book that I read is not what people are calling volume spread analysis. Okay, I have a question for you. If large banks or institutions are trading in dark pools, then who's trading in the futures? Okay, so the way that this works is a dark pool is actually just a way for large institutions to work with block trading firms without having to call them up. So it used to be, oh, I need to buy 100,000 contracts of 10-year treasuries. How am I going to do that? That's so many to buy. I'm not very good at doing that. I would probably move the market too much. I don't want my impact to screw the whole trade up, and that's money lost. So I'm going to pay somebody that's really good at executing to execute it for me. So I have to go and I call them on the phone, and then we negotiate what a price, right? And I have some human that's telling, oh, we can do it for this much. You look at the current price, and it's going to be a little bit above the current price if I'm buying, but that's probably better than what I think would happen if I executed it myself. So, okay, we do it, right? But I have to call somebody, and that takes like 5 minutes, and then like maybe the opportunity is gone, right? So wouldn't it be better if I could just say, I want to buy 100,000, and I go to the dark pool and say it, and then it matches me up with somebody, and they say, oh yeah, this is what we're willing to pay for 100,000 contracts? Way easier, right? So now you have bought, and the the block trading firm that you executed with, maybe they're short now. Maybe they didn't really actually have the shares. They're short now. What do? They're going to turn around and they're going to go to the actual market and they're going to buy it and slowly execute it over time, yada, 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 yada. Because the exchange is the only place with enough liquidity to execute something like that. So, and I made a video about this. You can go and watch it, and it's just the same thing. But basically, the orders that come through dark pools pretty much eventually make it to us over here in the futures, and we can see it on the tape. Okay, so the New York Times has an article out, apparently, just in the last minute or so, saying that Donald Trump is eyeing a bigger, better deal with China. So the S&P 500 definitely moved there. And it looks like it was to the upside because they heard like, oh, they're going to make a trade deal. That's good, right? Trump would like to strike a wide-ranging deal, one that goes beyond just reworking a trade relationship. So I can see why that would get the algorithms jimmies in a hustle, and that they're buying, but that's not a flow that I'm really interested in following. There's a massive thread on Forex Factory about volume spread analysis that's been going for like a decade or more. Wow. Yeah, so I had got this book, and I think it was a book that somebody like, okay, yeah, it was. It was like there was a Reddit thread, and every once in a while there'll be like a thread that's like, nothing seems to work. This doesn't work. This doesn't work. What? Can somebody on Reddit give me something that works? And one person will come in and be like, well, you know what's really, really effective actually is volume spread analysis. And I learned it from this book. Okay. So I'm like, okay, bet. Let's see. Maybe this will give me some like straight setups that we can trade and stuff like that. And the book wasn't really about volume spread analysis, I don't think. The book was basically about like, the book was basically when the S&P 500 comes back to the 200-day moving average, buy it. This is basically what the book was about. So I don't think that I actually learned volume spread analysis. But it sounds like Uzi has read a lot about volume spread analysis, so maybe there's some popular volume spread analysis setup we can backtest? I don't know. Would like to see. Tick volume spot Forex traders need to use has been proven to have a 96% correlation to actual volume? No. Really? I am so skeptical about that. I have to, can you give me like the name of an article where that's been shown? Yeah, you're not even trading real contracts for anything. It's all based on interbank transactions is what really moves and determines the price. And how could the retail volume be correlated to that? Okay, Tom Williams is the one who originated. Okay, let's look it up. Tom Williams, Master of the Markets, reveals how all markets are moved by the smart money. Oops. Have you seen this thing where like you get all of these people talking about this central limit order book? Have you seen that? I've seen multiple threads now. They're like, all of these exchanges, they're absolutely obsessed with the central limit order book because it gives them all of the advantage and the market makers all of the advantage, and it just screws over all of the retail traders. And I'm kind of like, the central limit order book? Oh, you mean the system that basically every electronic trading system has been based on ever? Like, come on. Welcome to the trader. No, I'm not going to give you my email. Screw that. Okay, so we're not starting that one. Not starting with that one. VolumeSpreadAnalysis.com. Oh, there's a whole website now. Now there's Wyckoff. Okay, so you know what? I don't know if volume spread analysis has anything to do with Wyckoff, But I was reading this thing the other day about Wyckoff. And, you know, because everybody's like, oh, well, like, you believe Wyckoff knew what he was talking about? And I used to be like, oh, maybe there was something to what he was saying. But, like, more broadly, the things that I see people trying to trade off of his ideas are doing are just contradict what we know, right? But now that I know a bit more about Wyckoff, I think, no, I don't think he knew shit. I think that he was the best grifter of his day is what that was. I've now come to I think Wyckoff is nonsense. (1929 to 2016). Tom began hand-drawing the charts that the pool would use to make their speculative attacks, and while doing this, he recognized the relationship between price movement, the volume, and where price closed. That's highly sus, because how far it's going to move based on the volume depends on liquidity conditions, right? Syndicates decided it was time to send Tom to the Wyckoff chart reading course, aka known bullshit. Okay. So, oh, he picked up professional trading at the age of 40. That's how I'm almost 40. I'm not quite 40 yet. Let me have the last few months of it, right? On this side of the hill. Master the markets. Us, we're trading stocks. We aren't really trading anything. We're all speculating. No, body back. I don't think you understand what they're saying. So if I come in here to the Treasury futures and I hit the offer with my market order, that has a small but measurable impact on the actual market. Like, there is an actual market there. I'm trading against other people. You could be sitting there on the offer waiting for your order to get filled, and my market order was the one that came in and filled you. Okay. But things like bucket shops, contracts for difference, and to a large extent Forex, that's really not what's happening. What's happening is there's just a price that is set that the institution that you're trading with gives you. And when you take a position, you're basically taking a position against your broker. And you're not trading with other people, and your order does not go to the market. Your order does not go to some central limit order book somewhere where it goes and it hits things. Right? So it's not really trading, in my opinion. because to me, trading is like you're taking a position in a zero-sum game against other people. And when it's against your broker, it's like a completely different thing. It's basically the same as sim trading because you don't have any real impact on that market. Yeah. Your broker is feeding you aggregated prices, and when you buy or sell absolutely nothing. Yeah, well, let's say it's a contract for difference, right? It's you're buying or selling a promise from your broker that they will pay you a certain amount based on how far the instrument moves while it's open. Yeah. Price either goes your way or it doesn't, and you either give the broker your money or they pay you some of theirs. Yes. So yeah, it's just not quite the same thing. That's what they were talking about. Okay, sorry, we'll just go back. I missed this other comment. All you have to do on NinjaTrader is put the volume histogram on. It will give you a choice to use either tick or real volume. Try them both and you won't know the difference on outright volume. Sure thing. That sounds good. That's cool. I didn't know that. Cool. I don't think my 1 to 3 e-minis hitting the tape aren't really affecting the market. Well, but they do. I wish I had saved this study. There was a study on archive.org a couple of years ago where they actually went and tried to determine the market impact of an individual order, like of a one lot. And they did find that they could quantify it. I wish I had a time machine, because if I had a time machine, I would prove it to you. Like there are situations where you can go in and whether or not you put your order in would be the determining factor in whether it went up or down. Your one lot. There are quite literally some situations where that can make the difference. That's kind of the nature of a chaotic system, is that a very, very small difference can result in wildly different behavior. And if we had a time machine, we'd be able to go in and say, okay, here's how the market behaved yesterday. And then we could go back in time and go back to that day and trade it with our one lot and see that the prices were actually different. If it was a day like yesterday, one lot could maybe actually make a big difference. You wanted to see the 96% tick to real volume. That's not something that I can easily do. I don't have that data. But surely somebody has, for you to be saying that specific of a statistic, somebody has to be saying it, right? So where did you get it from? Right? I would have to have the actual, like, volume on the bank side. You mean no. Like so the experiment would be like yesterday. Where is it? Oh, come back. That it was yesterday kind of matters. Okay. Where was it? Okay. So this kind of period right here. Oh, hold on. Okay. So there's what we do is this is what it was yesterday. I didn't take any trades, right? And then we go and we jump in our time machine, and we go back to 6 o'clock yesterday, and somewhere in this 2 or 3 hour period, we put in our 1 lot order. And I'm saying that there could be a detectable difference in how the price moved with just the 1 lot. Pull up the futures, but you're talking about Forex. Donald Trump is talking. He says Zelensky better move fast or he won't have a country left. NT volume doesn't count ticks, it counts contracts traded. Yeah. Okay, sorry. What do you think the difference between volume and tick volume is? Yeah, Uzi says it's the number of ticks that happened in a bar. Okay, so you're saying that if I look at the number of ticks that happened in a bar versus the actual volume, that the difference wouldn't be very much? Well, no, a tick is a minimal price change, but a tick is also considered just like an individual trade. Like if you come in and you set a chart up to show like 100 tick, right? Well, so I don't know why we're doing it. Like I'm so lost. Like I don't understand why you guys are talking about tick volume. ZN tick value 1000 tick. Okay, so these are 1000 tick bars, and then I come in and I put volume on it. Vol. My theory is that the actual volume traded in each bar will be different. Ta-da! He's saying if you lay contract volume traded over tick volume, they'd be identical. Well, that right there shows that that's not true. Okay, so yeah, they're obviously not. So there's, you know what's something that's really interesting though about the market is that like, when you look at the volume, like well over 90%, I think, I think over 90% of the volume that hits the market is one lots. Like I did this thing where, you know, I made a histogram of the volume, the size of the orders hitting. And like, it's ridiculous how much of it is one lots. Probably because, you know, big players, they split their orders up one way or another, right? But there are these orders that are so big relative to everything else. So you can see in here that, like, if you look at the volume per tick, it's like averaging anywhere between 2 and 10. So even though most orders are one lots, those ones that aren't are so big that it makes the average volume per tick be more than one. You need to explain body bag what he's looking at. So when you say 1,000 tick, so every time, where's what these over here, okay? Every time volume hits, NinjaTrader considers that a tick. It's an event, and a tick in this context, tick means event. So a 1,000 tick chart is basically a bar with 1,000 events in them. But each one of those events might be a multiple lot trade, so, which is why the overall volume doesn't match it. Yeah. If the differences were negligible, that blue histogram at the bottom would consistently read roughly 1K. Yeah. I highly doubt that that's what he's trying to say, though. Yeah. But I thought that the whole thing was that they were saying that the retail volume that you can see on Forex platforms was like 96% accurate to the actual full volume in the market. So what does that have anything to do with this whole thing about ticks? Uzi says that is what he's trying to say. Well, if that is what he's trying to say, it's clearly wrong, right? We've just falsified that, but... The tick is the price change? Okay, so how would I show that? What would be the way for me to set up the chart to show the thing that you're talking about? Okay, he says put up a 5-minute volume chart. So we're going back to minutes. 5 minute. And then he says to put volume on it. It's kind of funny for me to try and find volume because I don't put that particular one on charts very often. Okay. Okay. And then what? Copyright 1993, original manuscript by Tom Williams from the book The Undeclared Secrets That Drive the Stock Market. Even the book sounds like bullshit. Now go back in the volume settings. What do you mean in the volume settings? Oh, I think I know what you're doing. I mean, is there a setting here in the data in the NinjaTrader data series that you're expecting to see? What are you talking about? Yeah. Oh, this is the thing. We were talking about this the other day. You weren't there that day, body bag. Yeah, it's okay. So like, I think the reason you're saying what you're saying is if I'm on like TradingView, right? If I'm on TradingView and I want to do like a volume profile, for instance, how do we do that? How do I do a volume profile? Well, I have to do the way that I do a volume profile in NinjaTrader is I say, for every order that comes in, look at the price that order was executed at and put it into the bucket, right? Well, how do you do that in PineScript? Because PineScript does not have an on-market data method. So what they do is they come in and they say, we're going to use a one-tick chart. Doesn't get more granular than this. You have to, yeah, they won't let me use it. You have to pay for it. But if you pay for it, you can get one tick bar, essentially, or one tick data. And so then I can look at each tick, what price did it trade at? And that was the price that went on, right? Same with cumulative delta. So what they do with cumulative delta, if you wanted to make a cumulative delta on, in fact, maybe I can find one. Indicators, cumulative delta. Cumulative delta volume, maybe? Okay, sure. And when we come in to this script here, source code, right? What it's going to do is somewhere in here, it's going to load like tick data. It's going to like add a different data series underneath in here probably. Yeah, it's just a bunch of inputs. Oh, no, that's not the same. Okay, what this one is doing is it's saying how much from the open, how much did it go to the high and how much did it go to the low, and it uses that to determine the percentage of the volume that's considered long or short is what that one's doing. But I've seen some where they say, okay, load up the one tick, and then that allows us to do the volume profile and that sort of a thing, right? And so then when you would say, like, does the one tick data correspond to the volume data? Like, yeah, like 96% of the time.
Block cell.
But if you want to do something like what we're doing, like real cumulative delta, where we're looking at the current best bid, best offer, and the price that the volume came off at, and relative to that, whether it's a buy or a sell, that compared to the methods that they use to create cumulative delta from one tick volume, they are not close. It can be as much as I'm gonna guess it could be as much as 30% difference sometimes. But I still don't understand why you're bringing that up. It seems like this kind of random claim that's kind of popped up out of nowhere. But all of that kind of suggests to me that maybe Body Bag doesn't necessarily understand how a limit order book even works. Right? Because he's saying things based on what he knows about his charting platform. Yeah, the study I saw with 96% correlation was referring to a volume histogram. Okay. Yeah, but I don't think that that's saying what you claimed it was saying, right? Like, so if I'm on a Forex platform and it's providing volume data of some kind, it's basically just showing me like the retail day trader volume, right? It's not showing me the volume that's actually trading through the interbank system that they have. So those aren't going to correlate whatsoever. And the way that you would have to do that is to look at the volume traded on that platform that it's given, and then you'd have to have something that shows how much the banks traded with each other that day, I guess. I'm not sure if that's something that's like available or not. Do you have Euro USD data? Not Euro USD, just the FX futures. Like if I can do 4x, but it's just not going to load anything, right? But I can do 6e. And that gives me volume, but that's volume on the futures contract. Compare a Euro USD chart with volume on it to a 6e chart with volume on it. Okay, we could do that. Well, we could pull that up in TradingView, right? TradingView. You need a view. Try TradingView. FXCM. They supposedly provide data, right? Volume. Aha, there you go. It does provide volume. They don't correlate very well. Maybe a little bit. Oh, I'm showing it on a day chart. I'm like, something. Kind of interesting. Need to pull it up like that. Now they're about equal. So there's a spike here, and there's a spike here, and there's a spike here, and there's a spike here. Obviously, the numbers don't match up, but like activity over here seems to result in activity over here too. But those are just places where like the price is moving a lot. So I don't know if I would read too much into that. It's probably like news events happened up there. And more broadly, there's kind of these weird differences, like what's with this over here? That's on, oh, and I have to zoom out over on this one. There we go. So like that volume level, it just doesn't seem to match. I don't think that it would come out to 90. I wouldn't, I don't think it would come up to 96%. But what I'm saying is the volume that I'm getting on this chart is people on FXCM trading, and the volume is all based on people in FXCM trading. And there's volume traded between the banks that is only known by the banks. And I bet that there's probably some degree of correlation, because like when it moves, probably the banks are going to be doing stuff, and you know, so there's going to be some, but it's not going to be 96%. You know? And then again, like the bigger thing that I see here is I don't know if you understand how a limit order book works, because those things are all going to be interesting to you if all you've ever done is look at TradingView and those kinds of platforms and not looked at anything in the order book. But once you actually have the order book, you're going to get into like the nuances that are more interesting where it kind of makes a difference. I traded on MetaTrader. Oi. Okay. My condolences. And the CME volume on the futures is nearly identical when I switch it to... holy shit, bro. Switch the Ninja... oh, yeah. Let's just switch this one to a 1 minute. Oh, because this one is a 1 minute. Hey. Yeah, there you go. Mm-hmm. And I have to zoom it out really far again, right? Oh my gosh, this one is so zoomed in. Okay. I mean... they're not identical. Yeah. I mean, there's kind of closeness. I don't know. So I don't know what volume spread analysis is, but I bet you that if you were doing something that was like, okay, here's the bar, and then we're going to say a certain percentage of this volume is long and a certain percentage of this volume is short and all of these sorts of things. And then they would probably come to pretty close to the same conclusion, I guess. Right? But that's all just kind of like heuristic based on like, I don't know, like what are you actually doing? Like, there's some larger theory of the market. Does it actually do anything? Like, can we prove anything about it? At that point, we're getting into this whole different world that's like, okay, but like, can you prove anything about it? Whereas, okay, let's talk about the limit order book. This is what we're looking at on the limit order book. If I go in and I place an order at 108.31, I'm putting on an offer. If this was live, it's not live, but if this is live, then that 54.00 would change to a 54.01. Maybe somebody can do that for me. All of a sudden, it'll start changing around a lot. Okay, but we put the order on there, and it would be my limit order sitting there, or I would put my limit order over here, right? And basically, my order sits there in the queue at the back of that queue. And in order for me to get filled, price has to come all the way down, and then it has to trade the 4,000 or 5,000 contracts in front of me, and then I'll get filled. And so who are the people that are trading against that? Those are going to be the market orders. So a market order will come in and I say, I want to buy. I want to market buy. Then my market buy will be matched up against the current best offer, which is 28. Right? So what we can do now that we have that order book information is we can sign orders. We can say, okay, there's volume hitting 27.5 right now, but there's also an offer at 27.5. The best offer is 27.5. That means that all of those orders that were going off at 27.5 were market buy orders being filled or matching up against limit sell orders. So the aggressor was a market buy. So we say the sign of that is positive. We say it's a buy. Right? Versus if we were seeing it now that we have a bid, if we saw it at 27.5, it would be negative. It would be sells. Right? And that's how we get cumulative delta, for instance. And what is cumulative delta? Cumulative delta is the net imbalance between market buys and market sells. It's an objective like number thing that like exists. I know a lady who places her trades by entering options prices with a corresponding hedge to the spreadsheet. She lost it. Well, I mean, you're doing options trading. That's not guaranteed. So if you go to like a block trading firm that's block trading futures, that they'll all have DOMs up. Much more advanced DOM that has, you know, assisting algorithms involved. Use the DOM. Seen it with my own eyes. Like not just like some lady I know. No, I mean like I can tell you the exact people. I won't name names, but I could tell you the exact people at Goldman Sachs that have these things on their screens. So, what of it? Okay, VSA is reading volume and its effect on the price. It was at low volume with a wide range candle or high volume with a tight spread, etc. Okay, and then what? Well, I'm the only because I should be going now, right? But I'm kind of interested in, okay, can we backtest the volume spread analysis setup? That'd be fun. So what it sounds like you're saying is, take the total volume divided by the high minus the low. And that gives me some sort of metric about how much impact the volume is having on the price. Nah, it ain't like that. Enlighten me. Because this book is well, it's only 185 pages. Maybe I can just read it this afternoon. I'll give the kids the iPads. It's a marketing gimmick, so it's very art, not science. Oh, okay. Julian says, "Oh, that might be interesting." Oh, no, you know what? I think I actually programmed that at one point. This right here is kind of one of those things that, like, once you program it up and everything, the result that it gives you is kind of not interesting. No, it's not in my indicator suite, but I bet you that if I went back onto my old computer, it might be. I think that there was like an old computer where I lost some things, so I might not have those ones. Let's see here. Microsoft revealed its first quantum computing chip. Interesting. Where did I put it? There we go. Here's the old indicators. What was this one? I wrote this code and it makes 0 sense to me. X movement range efficiency. So plot 0 is ticks. Where does it set ticks? When it is a range tick. If bars in progress equals 1. Values, no, but that's gonna be, oh, here it is. I'm using a 1. I'm adding a 1 range. I see. So the first one is the number of ticks in a bar. Oh, okay. So this isn't showing me volume. This is showing me ticks. It's showing me ticks. But where does efficiency get set? Right there. High minus low divided by tick size. I don't know what I thought it was showing me, but it was something like that. This is kind of the thing where it was like, I understood order flow and stuff, but I didn't really understand the empirical properties of it and everything. So I was just kind of like using my computer science experience and the data that I had to be like, okay, what might be interesting about it, right? Oh, why is it not interesting? No, yeah, it wasn't that there was no edge to be found. It was like the information that it gives you is like exactly what you expect it to be. In other words, you can look at a chart and guess exactly what it's going to be. And why does that happen? Well, the reason that happens is because there's less liquidity, right? It'll move through in periods of less liquidity. So that metric will basically say, like, it's really efficient. You get a really wide range relative to the amount of volume that is trading when their news just happened, for instance, right? That's basically all it shows you. You're not going to trade a VSA trading algorithm. It's basically subjective. So I found a PDF here. And I'm just looking at it and I'm just reading the contents. Volume, the key to truth. Understanding volume. What is bullish and bearish volume? 19. I bet you that they're going to say that bullish volume is when the bar moved up and bearish volume is when the bar moved down. Yeah. Bullish volume is increasing volume on up moves and decreasing volume on down moves. Bearish volume is in, yeah, okay. So they're saying that when volume is going up and price is going up, that's bullish. When price is going down and volume is going up, that's bearish. But then when price is going up and volume is not going up, that's bearish volume. And then when price is going down and volume is going down, that's bullish. So you're not going to code a VSA trading algorithm. It's basically subjective. Well, but this is testable, right? This is testable. We can say, we can use a moving average to determine like what the trend is. Right? It's like increasing volume on up moves. So basically we say when the moving average of prices, when the moving average of price is moving up and the moving average of volume is moving up, and their theory is that that's bullish. And so if we, from that point, take a trade and then hold it for 30 minutes, that should be net result in profits, right? So that would be the premise that you would test, right? But I can already tell you what's going to happen. It's going to come out randomly. Why? Because what the trades that happened in the past don't really have any predictive value for the trades that happen in the future, aside from a persistent imbalance in the sign of orders. And even then, that doesn't necessarily result in the change of price because you don't know how big that imbalance is. So that's just kind of like what we know. We could go and test it and verify which theory is correct, right? Making his own, well, that was an assumption. We just read that one part. We just read that one part of it. You need to look at the price spread and the price action in relation to the volume. Yeah. High volume on wide. No. I think that they're saying you have to have multiple bars to do it, right? I don't know, but this right here, this is exactly the shit I'm talking about, man. What is it? Okay. Oh, why is it highlighting like that? No way. Blue. There we go. Okay. So he starts out by making a pretty objective claim. When you see increasing volume on up moves, bullish volume is increasing volume on up moves and decreasing volume on down moves. A bearish volume is increasing volume on down moves and decreasing volume on up moves. And then as soon as he makes that claim, he then comes and tells you why this is useless. Oh, this is only a start, and in many cases not a great deal of help. You need to more than this, a general observation. So like you could say like there's a slight edge in that, but it's not enough for you to make money. Maybe. But then is there a slight edge in the price action? How do you sort that out, right? Like he's immediately injecting all of this uncertainty into the setup so that you can't test it. But we can still test the base claim. Maybe tomorrow we're supposed to be going. Oh, I didn't see that one. I didn't see Uzi's link. What is this? See, like everything that I'm reading so far kind of sounds like what you come up with before you understand how a limit order book works, right? It's like once you understand how a limit order book works, then you say, oh, actually what I want to know is what is the sign of the market orders and are there more market buys than market sells? And since you don't have that information, you're doing all of this stuff to try and sort out, well, it's going up, but the volume's also starting to increase. So that, what does that? And that's where they're getting this from. I don't know why they call it spread. The spread in the later name refers to the spread between the opening price and the closing price. And apparently it does have some relation to Wyckoff. I can read DOM order flow trading. Like, okay, so like, here's the thing that it comes back to is like the number of claims here is like rising exponentially, right? They're saying a bunch of different things. Basically, it all comes down to if it was like an objective system to do things, then people would backtest it and see that it doesn't work. So you have to inject all of the, well, this is why it's more complicated than that, right? And that's not even just like a, okay, maybe they're like outright trying to scam you, and that's kind of the way that they do it. Right? I mean, it's not just that. I mean, that does happen. But the reality is like, if you could test it, why wouldn't you? You know? If you could backtest it, why wouldn't you? So, yeah, any strategy that any retail trader is trading, it's either been systematized or there's something about it that makes it difficult for them to systematize. Now, usually that has the reason it's difficult to systematize. We just say, oh, it's difficult. You can't backtest it, right? But that's because you don't have the skills, right? Well, once you get the skills, then you can kind of be a little bit more specific, right? Like the way that I trade is difficult to systematize because it involves a lot of informational, I'm looking for informational inefficiencies. So I'm basically scraping the web for information about things that could potentially predict orders and doing studies about things that can potentially predict orders, like that there is a 20-year auction today, for instance, is a critical piece of information. And so you would have to find a data set that provides you all of that information historically and distill it into the orders that you're expecting for the day and all, right? Like, I don't have the resources or the data to do that. Algorithmically, we should be able to do it. But then the other way of doing it is that there's so many millions of different things that are being factored in that you just couldn't program them all. There's like a trillion different conditions is kind of what they do that overwhelms you. And that does not deter me, because I basically understand how we can take each individual part of that and distill it down into a simple test. So this book, it sounds like that this book is the originator, right? But here's a starting claim that is kind of sounds like that's like one of the key claims to it, right? You can backtest that. It's not going to turn out that way. I'm just telling you right now. I would bet money on it not turning out that way. Except for that, I know that once I proved it, that you wouldn't believe me, wouldn't pay out, so I wouldn't put money on it. If we could do this thing, it's like I'm gonna program it all up. I'm gonna clone myself. Yes, that's what I'm gonna do, because I have to clone. I wouldn't be able to. I'm gonna have to do some back testing and kind of like overall like test different things and stuff like that, right? Okay, so I clone myself first, and then I have my clone write the strategy up. Okay, and he's gonna do all of the stuff to say, okay, like I've written it all up, and it is. Like, I know I've looked through all of the entries and exits and everything, and we've verified the clones. We'll both clone ourselves. The clones have agreed that this thing is trading the way that the volume spread analysis strategy, or at least this part of it, right? Okay. So now that I know that we have this strategy, I will then be able to place a bet on whether or not it would show an edge or not, and my bet would be that it doesn't show an edge. Right? But then you get into this other thing, which is, irks me to no end, which is this whole thing that like edge A plus edge B can equal a profitable strategy, even if A on its own is not profitable and B on its own is not profitable. And or to say that there is no alpha in A and there is no alpha in B, but somehow combining them together results in alpha. Which I just absolutely can't stand. But you know Futures Analytica? Oh, that sounds familiar. Level 2 Azimuth Automated Depth of Market Strategy. I'm not familiar with that. No, yeah, okay, so like, doesn't overwhelm you. Put in the hard work and learn to trade and stop trying to find a bot to do the hard work for you. Okay, so, but do you understand, like, so we're going back to, like, how much data do you really need to know that something works? 5 years. Probably more than that, because there's going to be, like, certain periods where, like, you say it doesn't work, so you're not trading it at all, right? So you have to trade, okay. So, like, it might take you 10 years or more. Okay. That's cool. We can do it. We're going to put in the hard work, right? Okay, you do it. You spend 10 years, and it doesn't work. Now what? What have you done? You've wasted 10 years. That's what you did. When you could have just gone and back tested it and saved yourself 10 years. Could have back tested it in a month and saved yourself 10 years. That's why you back test it, dude. You back test it because you don't want to put in all of this effort into something that's actually just random. Do unexecuted orders move price? So a limit order being placed or canceled does have an impact on the market. I wouldn't call it move price, but it has a measurable impact on the market. It does. Where it kind of gets interesting is you have three things that can happen. You can submit a market order, you can submit a limit order, or you can cancel a limit order. You can't cancel a market order, right? Because as soon as you submit it, it gets filled, right? And where it gets interesting is you can kind of go and look at, okay, like here we have at 26 right now. Right on the inside, that number is constantly changing, right? So there are a certain number of orders being placed, and there's a certain number of orders being canceled at any given time, right? And if a market order comes in and does the number of cancels versus adds and all of those sorts, is there change in the behavior of those orders? And so now you can kind of look at all of the changes that are going on in the DOM, and you can kind of look at the relationships between them. How this one thing happening with this set of orders will affect these other set of orders and things like that. Quantify it? How much? So that's why I said an impact on it, right? Because when you want me to quantify it, I think that would be like one order being placed on the limit or canceled on the limit will move price a certain amount, right? But I don't think that I could objectively say that it moves price as much as it does. It has an impact because the other orders react to it, right? So I'm unsure what the unit of the impact would be, right? You could probably go and look at all of the so you got the 3 actions, but then each of those actions can be buy and sell. It actually gives you 6, right? So we could actually go and look at how what is the net impact on each of those 6 flows from that one action. And you could probably look at that, and you could potentially quantify it. Oh, this paper sounds familiar, dude. And just searching. Oh. Let's try that. Let's try that again. Oh, not sure. Well, that's not the same name. I don't know. It's not popping up for me. If you can't quantify it, how do you know if... Because... Here. on a second. Find it. I don't just pull this shit out of nowhere, dude. See, I think that some of you, because you're kind of just, you know, you've heard people say things about the market, you watch the market, you kind of build up your ideas about the market, but you're just kind of winging it, right? And so when you have a belief, and you know, that's just where did you come from, you might not completely understand where it came from, right? Because you're chat GPTing it. But I don't do that. If I'm telling you something, there's like specific research I've read that I'm pulling that from, right? Why is it giving me the American physical? Oh, that's interesting. Yeah, I don't think that's probably the best place for me to go though for it. How about ResearchGate here? Yeah. By Marcus Daniels. Yes, it is this one. This one. The link is too long. I really don't think that's true, body bag. I think you're full of shit. I really do. I've done my research, and then why do you keep saying so many things? Like, if you had read any of this research that we're talking about, you would not be saying these things. You've clearly not read any of the order flow research. Okay, so if you're claiming that pulled limit orders affect price, you're basically saying traders are being manipulated by looking at spoofed orders. Somebody coming in and spoofing orders does have an impact on the market, yeah. That's why they made it illegal. That's why they do it, because it works. Most of what people are seeing on here is not spoofing, but you know, most of what you're seeing is actually market makers with orders canceling their orders because the price in the correlated asset moved. I don't know. You can search for this quantitative model of price diffusion and market friction based on trading as a mechanistic random process. And that is as more broadly known as the Santa Fe model. Or you can read Trades, Quotes, and Prices, Financial Markets on Microscope by Jean-Philippe Rougeau et al. And they talk about it in one of the, like page 136. Oh, you got it. Christian just send me the straight up the one that he's talking about. Oh, no, this is so familiar and sus. Okay. Sounds like a legit study. Who are these guys? It's probably, so it's a research to try and sell their trading platform. I get you. Thank you for admitting that the order. No, so man. So something that I find really, really frustrating is I have all of this content on my channel explaining a wealth of empirical information, properties about the markets, pretty detailed explanation about how I approach markets and how I look at things. And then people will try and argue with me and basically in the way that they argue, prove that they haven't watched a lick of the content. Right? Don't you think retail is provided with DOM data to help them trade better? Do you? Are they manipulating you? Well, so it's expensive data, so for starters, and let's just put that, I mean, that's an interesting argument, but it's not an empirical argument, okay? And it doesn't have anything to do with the base argument that you're making, which is because people can spoof and that has an impact on the market, market makers and large players and so forth can manipulate you with the market depth information. Kind of like the same way in which they can kind of manipulate you with price information, right? Okay. That's true, except for that, again, the whole thing that I've been saying from the very beginning is what are we doing? We're predicting orders. The whole thing is can I find things that help me predict orders? Can I find things that will help me predict that there will be more market buys than market sells over this session? Can I find things that will help me predict that big old order up there is going to get canceled? Can I find things that will help me predict that there might be an iceberg there? Right? So there are. And there are situations where there is a spoof. And because of the other information that we have and the predictors of order flow that we have, we're able to identify that it's likely to be a spoof right away and take advantage of that, essentially. So just because there's spoofing and everything doesn't mean that the level 2 data is useless. Because at the end of the day, the orders are what determines how the market moves. You don't have a full understanding of why price moved the way that it did unless you're able to look at all the orders. That's why it's so essential to look at all of the orders. A lot of what you're seeing is just randomness, right? But there are some situations where you can get predictive information about how orders are going to come out. And when you combine that with the other market conditions, the other orders that are already in the market, you can get pretty good predictions about where things are going to go. This is typical retail trader BS. The market is manipulated is the most posted comment on any retail. I know, right? Like I was saying earlier, one of the things I'm catching up on, I don't know where it's coming from. There's got to be some big influencer out there has started going on about the CLOB, the Central Limit Order Book, oh, that's how the exchanges are able to screw all you retail traders over. There needs to be a change. Not realizing that, like, that's how every market has worked ever. Know for a fact big players drop big orders in a methodical way each and every time, and that being the case, it is recognizable. Okay, prove it. Like, the thing that's the most frustrating about what's going on here is, like, every time that he says something, he asks me a question, like, I can give you a really detailed explanation about it. I can provide you some of the math behind it. I can show you all of the studies where we learned this stuff from. And meanwhile, I'm just getting, like, layer after layer of nonsense that's just never gets proven. What I've found is that, or what I've been told, at least, this is something that institutional trader told me, is that, like, you know, well, will you use patterns? And they're like, well, like, if there's something happening in that market that's popular, right? Like if a really good example here would be the whole what is it called? Smart money concepts thing, right? The silver bullet strategy, right? Like, there's a lot of retail traders out there trading that. So if I can change the way that I execute in a way that pattern forms up, right? And then you're going to get all of these retail traders trying to fade that move, and that provides you liquidity for you to fill your orders on, right? And then as you do that, the retail traders will get burnt on it and stop thinking that it works and go away. And then you go and you find what's popular in that market, right? Like the thing is, I think is kind of funny about it is, like, you think that you see a pattern, right? And you take a position based on that pattern. If I knew, if I had 100,000 contracts to trade, right? If I had 100,000 contracts to trade, you could tell me what position you have, and I could go and stop you out basically every time. I would lose money doing it, but I could stop you out every time, right? Why is that? Because it doesn't, all this stuff that happened before doesn't matter. What matters is the orders that are coming next. And I could choose to make the orders that are coming next be all sell just because I don't like you and you bought. That could happen if I had that much money. Hopefully, see you do backtesting tomorrow. I think, you know, I wanted to do a little bit of, like, Rust stuff today, but I was kind of paying attention here on this, and, you know, it fizzled out. It did fizzle out. Still more of a move than I kind of thought. But you know what? This kind of thing that we had here today, I might be getting, I think that I might be getting where, like, my, what would we say, benchmarks and everything in my head are kind of getting thrown out of whack, right? Like, we've had so much volatility. This is a pretty standard move, actually. So, yeah, back to normal behavior in the treasuries, maybe. So I want to know if it's a legitimate study and it works, or if it doesn't work and they just want to sell their product. Well, it does sound like that they have empirical evidence, so that's good. Overall, the thing that they're saying sounds interesting and sounds like something that is similar to other studies I've seen in this space, but it does seem like it is geared to try and sell you something. But more broadly, what it's trying to do isn't really that interesting to me either. Right? Like what would be interesting to me is I can predict future orders with this, right? It always comes back to future orders. Can I predict those future orders? Especially like I was talking about, you got like those 6 forces, right? There's you can market buy, limit buy, or cancel a limit, and then there's buy and sells on all of those, right? If I can, show something that objectively predicts a change in those 6 market forces, then I'd be super, super interested, right? But they're like working from a completely different framework, so it's kind of like not that interesting to me. It also like did not show up anywhere when where was that link that you were giving me? Oh no, it's just I downloaded it. Oh yeah, because you gave it to me. I get you. I don't know, but I'm a little suspicious that I can't find it anywhere. Did I miss anything? If it was recognizable, other large orders would take advantage of that and hit those orders, making this... Yeah, well, yeah. Because it is, again, if you don't have empirical evidence for a claim about the market, then don't bother sharing it, man. Come on. Like, I like, what do you think is going to happen? Okay, I've made like 6 claims today, and Seth has torn each one of them apart because of the lack of empirical evidence. Hey, I know what I'm going to do. I'm going to bring up another piece of information and claim that there's some sort of edge behind it when I can't prove it again. And maybe then Seth will like me or something. Like, what the fuck, dude? Find data or go away. Seriously. My gosh. Can you prove that the cost basis indicator works? So I cannot, it would be interesting to know, because we don't have the data for this, the average position that we're calculating, how well does that correlate to the actual average positioning of the market makers in the market? Or rather, the average price that they acquired their inventory at is what it's essentially saying, right? We don't have the data to prove that. We have a very, very clear framework and thing that it's saying, that it would be very straightforward to test if we had the data, right? Perhaps we could get our hands somehow on that data from Mount Gox before it went under, because that was like all of the data, right? And then we could definitely do it, right? And then we could definitely do it. But it's not just like pulling a number out of nowhere, right? It's not like, oh, here's this random number and I just gave it to you, right? No, this doesn't work like that. It is calculating like something real, and it is something that we have a substantial amount of evidence to suggest that price reacts to as well. We get hard bounces off of it so often. It's really, here's today. Well, I didn't get on the other side, and now we're kind of coming back to the basis right there. It'll do it every day. Now, you might want to make your own technical analysis theories off of it. Like, in situation X, it should bounce off of this line, and then you could go and test that, right? And that's the whole thing is like, I'm providing it to you so that you can do that, right? So, to say that, like, there's not evidence behind it, I mean, there's not a claim. Well, I guess the claim is that if you make that this model it gives you some idea of what the average market maker positioning is. We can't prove that side of it. But then there's this other claim, which is like, is the average market maker positioning useful? I don't know. No, I'm not calling the other people out for selling trading tools. I'm saying that this particular study in and of itself is a little bit suspicious. But, you know, ultimately you'd have to go down and, you know, like copy their work and go through the data and see if it actually, what they're pulling out is actually something or not, right? That's why you provide empirical data, because then I don't just have to take your word for it. I can just go through it, right? Okay, well, I have an indicator here. This is an indicator that you can generate empirical data from, right? I'm not making a claim on it. You can make any claim that you want about it. Go and prove it. Go and show it. If you think that the indicator is bullshit, then go and use the 2-week trial to set up some sort of particular objective test and show that there's nothing to it. Because everything is there for you. The data's all there. Right? Almost everything that I'm talking about is like, you know, you're talking about a setup, or you're talking about a market behavior. You know what I mean? Like, the sign of market orders. This process that we go through, wherein we look at the best bid, best offer, and determine whether the market order, which side was the aggressor, which side was the market order, whether it was a market buy or a market sell. Okay. That's not a claim, right? That is a metric. That's a metric. I'm explaining to you how you develop this metric. The metric being the sign of an individual order. Okay. A claim would be if you pick a random order and you find the sign of that order, and then you pick another random order an hour later, they will be the same sign 0.5% of the time more often. That's a claim, right? And it's one that, because we have so many orders and everything, it's a claim that you actually have a lot of statistical data to back up. That's a claim, right? By the way, I have a version of cumulative delta that is like more backtestable, right? So, you know, I created, I mean, what do you want me to do? Do you want me to not put it in there? I can keep it to myself. I'd be happy doing that, actually. I can take it back out of the indicator suite if that's what you want. I'm just... I'm reading back because I don't read all of the comments when I'm like making a point, right? But he's like, refrain from calling other people for selling. I didn't say that people shouldn't sell trading tools. That's, you know, the thing that pisses me off about Tilt is that he just makes all of these crazy things that's like that, but that's not what happened, dude. You just asked me about one study. It is a study. It's interesting that they're like providing a study to try and sell their stuff. That is not the first time I've seen that one, I think. It doesn't particularly interest me, but you're going to have to go and, you know, do the reading. That's part of what I'm trying to teach you is the background information that you need to know so that you can read a study like that and make a conclusion for yourself. I don't think I have time to look through that one. But I'm not saying that it's wrong because we'd have to look at the empirical evidence, right? You do find it a little suspicious. You said a study was geared to sell something? Well, I mean, that's objectively the case, though, isn't it? Like, I don't think if they were trying to sell it that study would be out there. That's objectively true. That's just... Don't you think that that's an important piece of context that you should keep in mind if you're going to look at that study? Sure, I have an indicator. You can buy it. I'm being pretty open about it. There's nothing wrong with that. I can only go back to the thing that I was saying earlier. It's like, if you want to go and, you know, talk about whether you're using a 1 minute chart or a 5 minute chart and the size of this candle relative to this candle and all of this other kind of general retail trader nonsense, you're on the wrong stream. And I try to be really, really open about, like, I don't want to, like, over moderate the chat or things like that. But if you keep trying to turn the stream into a discussion of that, I will get rid of you. Because we're trying to do something over here. We're trying to be excellent. And if you want to go and do the childish regular day trader thing, then I don't want you here. You're not helping the stream. And I have zero problem with getting rid of people that aren't adding to the stream, you know? You maybe find it entertaining, but I don't, because we're actually trying to do something here. Anyways, Xian looks done too. We're well past our time, so tomorrow I'll see you guys tomorrow. Wait, what's Thursday? There was one day this week where I think it was Thursday. Yeah, lots of Fed speakers. Goolsby, Philly Fed, unemployment claims. And manufacturing PMI is probably going to be Fridays. Friday's the big day. Don't let me hold you up. What is with this right here? That, like, this frame? When I try and load chat over here, it just, like, it won't load. What's with that? It goes over here just fine. Anyways, I'm going to try and do some programming today. See you guys tomorrow. Stay excellent.